Alright everyone, Cowboy Trades here. Welcome to the channel for this week's episode of This Week in Crypto, the news series where we discuss everything going on in the markets, news, TA and more. So, if we come over to Bitcoin, on the weekly time frame, you can see we're about to put in our fourth week in a row beneath Bitcoin's previous 2017 all-time high, which also happens to be the point of control where the most amount of volume was traded from the cycle lows in 2018 up until the point where we're at right now. As you can see with the volume profiles, it's going to be a really slippery slope if we start falling beneath this 19,000 level, which is of course the candle body close equivalent of Bitcoin's previous 2017 all-time high, and also obviously a huge psychological level. If we come down to lower time frames, you can see approximately around about this 19,000, decent amount of support has come in so far, so this is really where we would like to see get tanked. I also don't want to spend too much time reiterating any points that I made in my previous Bitcoin video, but as we're still talking about the new weekly candle body close, you might be interested to see that Bitcoin is still trading beneath its EMA ribbons, which are currently residing at 24,000. That's for the short-term moving averages. Long-term moving averages all the way up here at 31,200. We're still trading beneath our bull market support bands, coming in round about 22,000. And yes, we're still beneath the 200-week moving average right here, which we've literally been beneath right now for the longest amount of time ever. If I zoom out, you can really see this 200-week has normally been a huge area of support. And this is kind of one thing that I like to point out when everyone talks about, you know, this is a 2018 cycle, this is a 2015 cycle, but the data clearly shows that we're doing things that Bitcoin hasn't done before, like breaking beneath the previous all-time high from 2017. So it's just definitely looking a little bit sticky when we're looking at these higher time frame indicators, higher time frame technicals, moving averages, etc. And yes, as you can see on the 3-month time frame, we're basically right on support, not exactly looking too healthy. Please do bear in mind that on the 3 monthly closes, they're ranging between about 19,300 all the way up to about 19,500, depending on what exchange you look at. So it's probably best to go with the lower estimate. Beneath 19.3 is really bad, but once again, if we come back over to the weekly, this 19,000 is where the candle body closes are. We're going to have lost the point of control at that point. 19,000 is a huge psychological level, and once again, you know, with volume profiles, everything like this, there's not exactly a lot of data traded beneath these levels. So if we lose 19,000, it's going to be down very, very quickly. There's also still this nasty head and shoulders pattern which is lingering. It's somewhat ambiguous as to where the neckline is. I could argue the neckline is down here, where we've had previous weekly candle body closes at 19,300. I could argue that it's all the way up here, where we've got previous candle body closes just before the right shoulder at approximately 19,550. And then you can see, if we draw this a little bit differently, and we're drawing weekly time frame, we could probably find it drawn a little bit different on the daily, but you can see in terms of the candle body closes on the weekly, there is a uptrending level of support. If this head and shoulders is going to play out like this, as you can see, we're once again closing another weekly candle body close beneath these levels. So once again, like I said, I did just want to highlight it is potentially somewhat ambiguous as to where the actual level for the neckline of the head and shoulders is. All in all, I really don't see us tanking or pushing up too much further than this level of resistance at 19,700. So I'll keep an eye on that and I'll keep you up to date. Coming on to the lower time frames, but still rather significant for the direction of the higher time frames, is what's happening on the daily. Bitcoin is still trading beneath this 618 Fibonacci from our 17,500 lows, from the swing low up to the swing high. And also, as you can see in the lower time frames as well, we've got a point of control here, which we're trading beneath. On the daily time frame, once again looking at the EMA ribbons residing at 19,600, we're trading beneath them. So no matter what you're looking at, really, it's not looking too hot right now, and it's likely that we're going to get booted down to this 1.236 Fibonacci that we've been talking about for quite a while now. I really do think once we start putting in these weekly candle body closes beneath 19,000, once again, that is the macro point of control. Also, Bitcoin's previous all-time high in terms of the candle body closes, and when we highlight this 19,000 region over here, if I mark this as green as temporary support, you can see in the next really the next 48 hours, if Bitcoin is trading beneath 19,000, we're gonna start falling to the downside of this triangle pattern. We haven't yet broken to the downside of it in the way that I've drawn it. We have, yes, had a daily candle body close beneath this, but on the weekly time frame, we held up pretty strongly. So not too much to see right here. Another reason why 19,000 is unlikely to hold, but if you are a bull, yeah, this would really be the last line in the sand for you. And just super quickly for the total crypto market cap and the altcoin market cap, on the 3-month time frame, it's very, very similar. You can see this is panning out something like a bear flag. It's not looking hot. We're getting absolutely smushed on the total crypto market cap. When we come over to the altcoin market cap as well, you can see this is literally getting ready to flip bearish at any point soon. So when we're looking at the higher time frames, you know, the 3-month, sometimes it irons out some of these dead cat bounces, but no matter what we're looking at right now, 3-month time frame is not too hot for the crypto markets. Alright, so now we've discussed the charts and all the important levels to look out for. Let's move on to everything happening in this week. On Monday, not too much going on, although we will be kicking off the week with a bunch of new earnings reports. I'll talk more about that in a moment. We do, however, have another Fed talk from Vice Chair Brainard. Her speeches don't always have a dramatic impact on the markets. However, if she mentions anything worth knowing, I'll post it over on my Twitter, so be sure to follow me at 618_cowboy for these updates. And like I said, starting off on Monday, we're going to be kicking off earnings season. However, the notable earnings that are going to be taking next week are going to be on Tuesday. Louis Vuitton are going to be having their earnings report. On Wednesday, we're going to have Pepsi, Crayon, ASOS. Coming into Thursday, we've got Walgreens, Delta Airlines, Domino Pizza, American Bank, and then coming over to Friday, this one's going to be very important. We've got the United Health, we've got the JP Morgan, we've got Wells Fargo, Morgan Stanley, Citigroup. Most of these, like I said, they're going to be taking place towards the latter half of this week. On Tuesday, we'll have fresh comments from the European Central Bank. ECB's Philip Lane will be speaking, so you know this one's going to be rather important. He is set to speak both in the morning and then later on in the evening. So all in all, not a lot is happening on Monday and Tuesday, but let's jump into Wednesday where things really start to heat up. Now, on Wednesday, we're going to have the next US producer price inflation report. Of course, we're going to have both headline and core PPI. Now, while US producer price inflation has been having some slight relief to the downside in the past couple of months, we've been seeing a different perspective. Now, on this channel, we've been looking at the slower moving categories of inflation, basically excluding things like energy and food, which are very quick to react to new changes in price. However, when we remove these volatile categories for the CPI, we're left with the sticky CPI, and we can see that inflation is still heading up for some of the slower moving categories. PPI, in my opinion, is likely to start moving to the upside soon. Basically, if you don't know why this is bearish, it's as simple as producers are having to pay more to create the same amount of goods. What do you think they're going to do? Do you think they're going to make less profit per item, or do you think they're going to make the consumers pay the extra cost? So yeah, of course, consumers are likely to bear the brunt of this. This is where Thursday comes in. We have our next US Consumer Price Index report. Now, last month we had a further increase in the CPI up to 6.3%, almost coming up to where we topped out earlier on in the year. This was an absolutely huge increase since from where we were in the previous month, around about this 5.9% region. Which once again was something that we were able to predict when we were discarding the CPI and looking at things like the sticky CPI, the slower moving categories of inflation. This month, the CPI is predicted to move up a further 0.2% up to 6.5%. However, remember, sticky inflation is still rising. I personally don't think we've topped out yet, and I do think that US year-over-year CPI is probably going to reside round about 6.5 to 6.7%, meaning we're either going to be retesting the previous all-time highs this year, or we're going to be exceeding them. If this holds true, we could seriously break down hard on Thursday. Now, in my opinion, basically nothing is happening on Friday. We do have the US Michigan Consumer Sentiment Report, but this is not for the total of the US. This is not the US Consumer Sentiment Report. Most people haven't even heard of this Michigan one. So yeah, like I said before, Wednesday and Thursday, we have some of the most important news events in the markets, and with today being the new weekly candle body close, it could definitely get sticky this week for the Bitcoin, the crypto markets, and the rest of the stock market. If you want to stay up to date on all of these upcoming news events, then once again be sure to follow me over on Twitter at 618_cowboy. All the important data, figures, key statements mentioned in any of these events will be shared to my followers. If I'm not posting it over on Twitter, then you probably don't need to know about it because it's probably not that important. But with all that said, ladies and gentlemen, that's all I've got for you today. If you do appreciate this series, if you do enjoy my content, then help me get this video trending. I never like to ask any of you for anything but a simple like, comment, share. It really goes a long way. It helps the YouTube algorithm. More people get to find the channel grows, the content gets better. We build as a community. It's a win-win for everyone. I always do appreciate all of the comments. I can't always respond to every single comment. Nonetheless, I do read them. If you do comment, you will notice at some point I will respond with a heart. That means that I've read your comment. I appreciate it. Like I said, I unfortunately can't respond to all of you. I get messages on Twitter, I get messages on Instagram, Discord. I've got a life to live. I make these YouTube videos. But with all that said, like I said, really do appreciate all of you. I do read them all. But unfortunately, as you can imagine, there's only so many comments that I can respond to. So with all that said, make sure to join the Discord. Come and follow me over on Twitter. If you go on my YouTube and click on the About section, or if you just look at the description of any of the videos I post, you will find my official links to my Twitter, Discord, Instagram, official merch. So come follow me over on those platforms, especially come and join the Discord. So all I've got for you today, my friends, and as always, cowboy out. Peace.